or so, I don't know, 98,000, 99,000, that's unpledged. So if Bitcoin's trading at north of 60,000, you've got $6 billion of collateral, you could do something with it. And the question is, what would you do with it? Well, you either borrow against it, or you generate yield on it, or perhaps you can issue bonds against it, right? And these are all options. So if you look at our company going forward, the real question is, what's the difference between buying $100 million of Bitcoin versus buying $100 million of an ETF versus buying $100 million worth of MicroStrategy? And the answer is, if you buy the Bitcoin, you own the property on a Bitcoin exchange. The banking and the collateralization of Bitcoin isn't as mature. So a lot of people, probably it'd be hard to borrow money easily against the naked Bitcoin property.
Maybe the impact of the futures ETF will bring about more demand for borrowing Bitcoin for the contango effect. I'm sure there's a couple of hedge funds that say, "Hey, Mr. Saylor, can you lend me 50,000 Bitcoin? I can make 13% in a month fast."
I think there'd be a lot of demand for that.
Yeah.
I think if you buy the 100 million of the ETF, you own a security, you don't own the property. Having a title of the security in some ways is a weaker property right, because you can't put a lien on it, you can't mortgage it, you can't as easily, develop it. But the advantage is it trades with your prime broker, and you can pledge it as collateral in your collateral package. So most of the time, if you've got a security, you can borrow against it at like SOFR plus 50 basis points, or LIBOR plus 50, or LIBOR plus 100. So there's a big benefit to people that deal with prime brokers to have the security, not have the property. And then MicroStrategy is, the issue with MicroStrategy is you're getting a leverage long play, right? You buy $1 of Bitcoin and it goes to zero, you lose $1. If it doubles, you make $1. But when you buy a leverage long play, if it goes to zero, you lose $1. But if it doubles, you might triple your money or quadruple your money, right? So it's a different thing. And obviously, if you think the management team can manage the operation in a rational fashion, you're going to value the company at a premium. And if you think the management team, is not very rational, you're going to value the company at a discount. And that's what keeps everybody, honest and keeps us focused. We have to make sure we manage the opportunity rationally.
And I see that now as well. I've spent a lot of time in my life front running Wall Street because I don't see certain things. When I did my first ever arbitrage video on MicroStrategy stock saying this is a no-brainer, this is synthetic long, everybody go do it. And it was that's why we're here talking today. But if you look at the futures ETF, obviously it did suck a little bit of oxygen out of the room from things like GBTC and MicroStrategy. And I was talking about Bitcoin proxies when nobody even knew what they were back in 2020. I think it's very clear that's happening right now. But if a spot ETF hit the market, do you think that would suck additional oxygen? I know everything will gravitate towards proper valuation down the line. Just right now, it's a very good arbitrage opportunity as I see for proxies like yourself. Do you see that getting worse if a spot ETF hits?
I think that every single time another company comes public that's a Bitcoin derivative, that has a relationship to Bitcoin, it's good for Bitcoin long term and even midterm. And near term, there's dislocations. Right, like PayPal and Square are plugged into the Bitcoin system as quasi mini exchanges, as is Coinbase.
Yep.
Right, the miners are plugged into the Bitcoin system as security operators, and every time a miner comes public, hundreds of millions of dollars of capital, if not billions of dollars of capital, get locked into Bitcoin. You see people like Hut 8, right? They're raising money, but they're hodling.
Yes,
right.
Yes.
When a public miner raises $100 million, it's like $100 million of capital locked up in Bitcoin for the next decade. When they buy $100 million worth of equipment, that's locked up. Right. So an ETF is another form of a Bitcoin company, and it's a company creating an application of Bitcoin. Right. The hardcore Bitcoiners, they don't get it. They're like, not your keys, not your coin. This is awful. But what they don't realize is in a decentralized economy, everybody gets to create their own applications on top of Bitcoin, and if El Salvador wants to adopt the Bitcoin standard, then El Salvador becomes kind of a Bitcoin derivative of sort. And if MicroStrategy stock is a Bitcoin derivative, but also MicroStrategy converts, MicroStrategy senior debt, and MicroStrategy calls and put options are all Bitcoin derivatives.
Exactly.
Every single time another, if there's 16 ETFs, it's the quant's dream, right? If you're a quantitative trader, you build your program and you go, wow, Bitcoin is up, but Bitcoin futures are mispriced in Singapore, but MicroStrategy is mispriced against MicroStrategy call options.
Exactly.
But the MicroStrategy first convert is rich and I can sell that, but I can buy the second convert. But the ETF is like trading at a discount versus MicroStrategy. So I'm going to go ahead and write a program that sells this and buys that. And of course, at that point, you have to allocate capital.
Yeah.
I found a way to get a guaranteed 8% a year annual yield. And then they go off to somebody on Wall Street, a George Soros, and they say, George, I got a guaranteed 8% yield, no risk. We're not even taking a directional bet on Bitcoin, but I need you to give me $1 billion so that I can get you $180 million, and I'll take 2 and 20. And you'll get the others, and you won't even have to worry about whether Bitcoin goes up and goes down. And George goes, well, heck, if you can do that, why don't you just take $2 or $3 billion of my money?
Yeah.
And pretty soon there's a quant trader creating side markets in Bitcoin derivatives. And in order to do that, they have to lock up $2 billion of Bitcoin.
Yeah, it flabbergasts me how Wall Street can't actually value your company properly. Or even you still see analysts on Wall Street valuing Tesla at a PE of 1,000. I mean, like it's the easiest calculation in the world to figure out the actual true value of real companies, real intrinsic value. And nobody seems to do the work. And that surprises me. But you're dead right. That's going to change as the asset class gets more mature, I believe. It's exactly what's going to happen.
One of my friends was saying, we were noting that, Bitcoin's volatile. Even right now, it's bouncing around. And I said, well, sometimes you think you wish it would just trade in a tight range, plus or minus 1%. But then if you look at it, you realize that volatility makes it anti-fragile. And the fact that you've got the volatility bouncing around means that some really smart 27-year-old on a computer goes, I can actually lock in an arbitrage here. And they go and they raise 50 million from their friends and family. And then they do it, and then they raise billions. And exactly. and if you want it to stay a bit volatile, because you end up creating 100 different hedge funds with 10, 20, 30, 50 billion dollars in assets, and they're all trying to close the volatility, and they're feeling like geniuses because they're like, haha, MicroStrategy, your stock is mispriced versus haha. Like, okay, fine. Well, that means you're trading $500 million of my stock every day. And maybe that means you're going to put a synthetic short position on it, but that means that instead of the float being 7 million, it'll be 21 million. And that means eventually somebody's got to buy back the 21 million shares or do a collateral call. And ultimately it's good for Bitcoin. It's good for everybody. And ask yourself the question, how many 27-year-olds in Singapore are setting up hedge funds to arbitrage pricing imperfections in gold?
Yeah.
The answer is none.
Gotcha.
I mean, if you look at them, gold, silver, you're not going to trade them. You're not, even in the equity market, there's not an army of people that want to raise tens of billions of dollars to arbitrage inefficiencies in Apple stock because it's just too monotonic, And so what we've got here is we've got more options. And if they're perfectly priced, well, I guess you got perfection. And if they're not perfectly priced, you've got optionality. And the optionality makes this the world's greatest money market, and it makes it an opportunity. And ultimately, anything that locks up more Bitcoin, right? The ETF's an application, MicroStrategy is an application, and the hedge fund person trading the ETF versus MicroStrategy is a third application. Yeah. And it's like they say, man, you could say whatever you want about me, just spell my name right.
Exactly. In fact, you said something that jarred a thought in my brain. One was you are a synthetic miner. Now, I know it's very important for a corporation to stick to its knitting, and yours is kind of BI and mobile intelligence and stuff. But would MicroStrategy ever consider mining per se? Or is that way too off, if not required?
You know, I think everybody needs an earning strategy and they need a saving strategy, an operation strategy and a balance sheet strategy. If you're a dentist and you can make $300,000 a year as a dentist, then my best advice for you is build the biggest dental practice you can and make sure you convert your money into Bitcoin as soon as it hits the balance sheet. And if you start thinking about, if you love Bitcoin and you start thinking about ways to actually do better than just being long Bitcoin 100%, my next advice for you is sell equity in your dental practice, you know, at 10 times or 20 times revenue, sell 6 million, sell $1 million, 2 million worth of equity or 6 million worth of equity and buy Bitcoin with that. And if you can, I would say, why don't you go and sell debt? Maybe you can mortgage your dental practice. If you're generating $300,000 a year in cash flow and someone wants to loan you $10 million against it, or say, $10 million at 2% or 3% interest, then raise 10 million in debt and buy Bitcoin with that. And then you'll have, instead of 3 million in Bitcoin over a decade, you'll have $23 million in Bitcoin over a decade, and you'll have 20 million in Bitcoin in the first month. And, if you want to do something, stick to the knitting. The doing of something is either grow your business or leverage up your capitalize your business and then convert it to Bitcoin. That's a good idea. I don't think, if you tell me you're the world's greatest dentist, I don't think you should launch a mobile app to compete with Square Cash.
Yep.
I
Exactly.
don't think you should go in, well, should I launch my own Bitcoin podcasting show, Michael? No, I think what you ought to do is be a dentist. And if you're a podcaster, I think you ought to run the world's biggest, most aggressive podcast. And you ought to, if you can sell equity and debt, have at it, mortgage the business. But don't go into a business that you don't have strategic assets in. I mean, I think if you're Exelon, if you're a power company, if you own nuclear reactors, if you can go and borrow money, if you can borrow money at 2% interest, gold miners can borrow money at 1.5%, 2%, 3% interest. If you can raise $1 billion at 2% interest, then yeah, you ought to go and borrow $1 billion and buy Bitcoin, because Bitcoin yields 100% interest.
Yeah, excellent
So,
idea.
Use your assets, right? Whatever your assets are, use your assets, but I don't think you should go into businesses where you're the newcomer, the interloper, you don't have any assets just because you think it would be cool to be in that business.
I totally agree. I got a harebrained scheme for you. This is going to be a
Okay.
curveball. Imagine, all these credit card companies are paying rewards in Bitcoin. Would MicroStrategy ever consider paying dividends in Bitcoin? I know it's your pristine asset and you never sell and everything else, but how about that to raise shareholder stock price?
Yeah, I don't think you really get valued for it. I don't think you should ever give up any Bitcoin. I think that if you go forward 100 years, what's 1% of all the money in the world worth?
Exactly. Yeah.
And right. So I don't think you really need to. And by the way, I would say, I don't think it's a good idea to pay dividends at all.
For me, a company that pays dividends is a company that doesn't know what to do with its money, which means they can't execute or operate.
Let's take gold miners, right? Gold miners, they mine a ton of gold, they overmine the gold, they dump the gold on the market. My first view would be don't sell the gold, but they sell the gold, driving the price of gold down. They overmine the gold and they generate a big profit, 50% margin. So now they pay income tax, corporate income tax. So first they diluted the supply of the gold. They drove down the price of the gold. Then they paid a massive corporate income tax. They also ran up their operating expenses. They also moved down the marginal productivity curve. They found mines that cost $1,000 per ounce instead of $500 an ounce. So they're burning up the environment, burning up energy, dumping on the price of gold, paying huge amounts of taxes. And then they dividend out Oh, then they pay off their debt. They pay down their debt. And so when you pay off $1 billion note that costs you 3% interest, it's like making a loan to the bank in return for 3% interest. You're actually trading, and you're trading what could be an asset yielding 20 or 30 or 100% in order to get paid 2%. So paying off your debt makes no sense. And then finally, paying a dividend is what they also do. When you pay a dividend, not only did you pay the corporate income tax, not only did you actually loan money to the bank, you also forced your shareholders to pay a dividend tax on the proceeds. You got double taxed.
Yep.
Okay, so that's kind of like the behavior if you didn't believe in your business. If you thought your asset was going to zero and you wanted to be short gold, I would overmine it and I would pay double taxes in order to get the cash. And you're really going like triple long US dollar. Triple long US dollar. I had to lower the price, my selling price, pay a corporate income tax, pay a dividend tax, so I could go triple long the US dollar. And so I don't think that makes sense. I think the opposite makes sense, which is you take all your cash flows and you borrow as much as you can, as long as the cost of borrowing is an order of magnitude less than the use of proceeds.
Excellent. There's another thing that kind of vexes me a little bit, confuses my head. If you look at the 130 in treasuries around the world that pay nothing, in fact, I think it's 30 trillion pay negative return, and then you start taking into account debasement. Do you foresee a great reset? And do you believe that great reset could be accelerated by CBDCs going forward?
Not with a bang, with a whimper. I don't think there's like a great reset that implies that like someday everybody comes to their senses and does something. I think there's way too much inertia in the system. I think a better metaphor would be just like a persistent, progressive transformation. I think that of the 30 trillion in negative yielding debt, 20 to is whatever the number is, 20, 30 trillion. And it depends on how you define negative yielding debt. I would define negative yielding debt as the yield on the debt minus the monetary inflation rate. And if you define it that way, that means all credit, $100 trillion is all negative yielding.
The only thing would be yielding positive would be a junk bond paying over 15%, in my opinion, like some of the Chinese bonds now that are being issued.
Only a junk bond yielding more than 15% in the US dollar if you were an optimist and believed that the monetary inflation rate was going to dip below 15%. But in fact, you can make the argument that the monetary inflation rate in China is much more than 15%. That's why they need capital controls.
Yep.
Right? They're printing more money than we are.
Oh, yeah.
Right. So
Europe is printing more money than the Fed.
And so the monetary inflation rate, the true inflation rate for an investor inflation rate, it must be 20% in the US, Europe, it must be 30% or something in China, it must be 40% in Argentina, it must be 50% plus in a lot of the developing world. And so there isn't really any credit instrument that isn't negative yielding. And you can see, even if you look at the S&P index, James, the S&P is up like 24, 25% in a year. But if I've been using that as a surrogate for monetary inflation, but the truth is that's probably underestimating it. I think the monetary inflation rate is higher than the S&P yield. And the reason I think that is because if all 500 CEOs in the S&P index were not able to issue any equity or issue any debt in the last 12 months, then the price of the S&P, and the S&P index didn't change, then the price of the S&P index might be a good surrogate for the investor inflation rate. But we know that the amount of debt and the amount of equity that they have issued is substantial, which means that they have diluted that shareholder, the value of a share in the last 12 months, which means that the 24% return is diluted, and the true inflation rate is maybe 28, 29. in that range. It's in the higher 20s, I'm guessing. So coming back to this issue, what happens with credit? It's all negative yielding, but a lot of it's locked up in institutions and relationships that get reviewed once every 5 years and once every 3 years and once every year. And, there's some, if I'm 75 years old and I have billions of dollars with a money manager, I might not even make a decision for the next 15 years. I might leave it that way from 75 to 90. And I might creep at it very slow. So and if I'm likewise, if I'm a government, it might be a change in administration before they would consider. Our government is still holding gold, right? Look at, I guess an interesting surrogate or thing to look at would be the rate at which sovereign wealth funds or the rate at which central banks took on ETFs or S&P 500 index funds or big tech into their balance sheets. Norway did it. Switzerland did it, I guess. The Emiratis, right? In the Middle East, they did it, right? If you would ask them, do you guys want to hold gold? They would, kind of laugh at you. But the US hasn't put S&P index on their balance sheet, and that's been the store of value for the last 20 years, right? 30 years?
Yeah.
Certainly the last 10 years. There was a period, right, where maybe sovereign debt was a store of value. I think before the great financial crisis, up until 2008, it used to be, you remember when Italian bonds yielded 6% interest? I mean, it used to be that you could get governmental bonds that yielded 4, 5, 6, 7, 8, 9% interest. And you could tell yourself that the inflation is 7% and they're yielding 7% and there's a store of value there. But after 2009, all those sovereign yields in Europe, they all got pegged to 0 or, 1. And it's pretty obvious that the money supply is expanding at 7, the sovereign debt's yielding 1. There's no store of value anymore. And every intelligent investor rotated onto the S&P index or the NASDAQ. But, if you look at that, the only way you can theoretically hold value in an environment where the money supply is expanding at 10% is to grow your cash flows 20%. So all of the gains in the S&P index or NASDAQ all come down to FANG stocks: Apple, Amazon, Facebook, Google,
That's
Microsoft.
Right. The top 9 of the top 500 generated 80% of the return over the last 5 years. That's ridiculous.
There is no, so another way to say it is, before Bitcoin, the store of value is a big tech monopoly. Okay. A big tech monopoly, a dominant digital network dematerializing something with a monopoly. That's the only store of value left. Credit, sovereign debt is not a store of value. Value stocks are not a store of value. Utility companies with dividend yields, they're not stores of value because they can't grow their cash flows 20% a year. Now, growing your cash flow 20% a year while the Fed prints 7% more money works for Amazon for a decade. But if the Fed prints 20% more money, you have to grow your cash flows 30, 35% a year. What kind of company can grow its cash flows 30% a year for the next 5 years?
Other than 2 or 3 names that we know very well. Okay. Well, that's excellent point. I got 2 final questions for you. And I know your time is so precious and I'm so grateful that you spend so much time with me. But first of all, a big piece of the channel I have here is to give back, to help people find financial freedom so they can make the world a better place, help support animals and children's hospital and stuff like that. But I know you have the Saylor Academy, but what do you plan to give back to society as you become one of the wealthiest people on the planet? Because I've done the numbers and I think you will be. It's a no-brainer. 10 years from now, you'll be like, well, you know what you're going to be. But what is your greater mission in life?
Well, I mean,
20 years from now.
The plan for the Saylor Academy is converted into a full-fledged degree granting university. And we're on the path to do that. And we'll continue to expand the range of certifications and degrees in every jurisdiction progressively. And that's my sole heir, right? My primary heir. So when I die, whatever I've got will go to finance that mission. And the mission is free education for everybody forever. I think that there will probably be a lot of need for education forever for everybody. And as you know, like you can polish those courses and you can polish the certificates and you can improve the quality and you can translate. And in the ideal world, you'd be able to go K through PhD in every subject for free anywhere. So,
And maybe even spin off what I call the importance of kind of nano degrees in very specialist areas, like create a Python programmer in 12 weeks that can go earn a living for his family in Bangladesh or something like that. I think there's a huge call for that type of education too.
yeah, our most popular courses are, one of them is Python.
Hmm.
English is a second language, computer networking, C++. I mean, a lot of things you can learn online. And then we've got some short courses, like 12-hour courses, like Bitcoin for everybody. And then we've got some, pretty deep physics, electromagnetics, full semester courses, and lots of different areas we touch. But I mean, that's a bottomless well of opportunity.
Exactly.
And people are always they're always going to need more education. So,
and as the world becomes kind of more digital, people will start moving with their feet and labor will become much more mobile. It already is. So I think that type of education will give everybody on earth a chance to get ahead, which is very admirable. I have one final fun question for you.
okay.
This might be a hard one. So what question would you want to be asked that you haven't been asked before?
What's the most important thing to teach your children?
So if I kick that back to you, what's the most important thing to teach your children?
I'll tell my thoughts about education. One, I studied a lot of math, but most math, calculus of variations, linear algebra, all of the advanced mathematics,